There are many critical issues to think about when negotiating a new lease. Many small, medium, and some large investors go about leasing a property without really having any long-term plans. What are the things we should think about when negotiating a new lease for a new tenant? The first item is whether we should lease a property at all. That might sound ridiculous, but have we got a plan to do something with it very quickly, as in the next 6 months or 12 months? If it's only a small part of the building, the money part of it's not very large, why tie ourselves down to a lease when we plan to do something in 12 months' time? That's the first thing. The next thing, when you do lease a property, is going to be a gross lease or a net lease. A gross lease is when all the outgoings are included in the rental period, the rental amount. A net lease is when there is a certain amount of rent plus additional payments for any outgoings. So that in a net lease, the landlord is guaranteed to get the money, a certain amount of money every 12 months, with increases in the lease. In a gross period, that could vary because maybe the outgoings might increase quicker than the rent increases. So we'll cover that I've got other videos here which cover that in more detail. The next one is length of lease. This is very critical. Now the thing is, how do we plan our leases? Now, most landlords to keep all their leases in sync so that they know that in 3, 5, 7 years' time the building will be vacant so they can do something with the property, which is a good thing to do. Others prefer to stagger them so that the situation, if it changes the economy, they don't lose all the tenants in one go. But think of things on a long-term basis, if possible. What do you want to do in the long term? Do you want to develop it in 5, 7 years' time? If the building is in good condition, can't really be developed, and looks like it's going to be like that for a long time, then maybe length of lease is important. Have long leases in. That plan ahead, think about it. Rent increases. Now, up to recently, the last jump in interest rates, rents have always been around the 3% increases per year, or the CPI, the current inflation rate. Now this has probably jumped up to 4 or 5% now. Generally, the shopping centres have normally got a fixed increase, normally higher than the general interest rate increase. And they sometimes have a fixed CPI plus 1 or 2%. But 90% of leases are fixed on a certain percentage. We're up to 3% up to a couple of years ago, 4 or 5% now, or CPI, which is the rate of inflation increase. Another one is options. This is a very controversial issue as well. Do we give a 3+3 or a straight 6-year lease? So a straight 6-year lease, both sides of the party are guaranteed 6 years. A 3+3-year lease is actually in favour of the tenant because they know in 3 years' time they can decide to leave and move on. They can stay where there's no security for the landlord that they're going to stay beyond the 3-year period. Usually in the first term of the lease, there's a certain period, usually 3 months, where the tenant must let the landlord know whether they're going to renew their lease for the 3-year option. And they don't have to do it beforehand, either side. The landlord has to tell them what the new increase is going to be, if there's an increase, and the tenant doesn't have to know that they're going to stay on until that 3-month period. Usually it does vary between state and countries. Now, when you have options, what are the option period increases? Are they fixed? Are they related to the CPI or inflation rate? Or they are at market value? The incentive is to have it market value because we all think that things keep on increasing at a fast rate. It doesn't always happen with rents. I've found they've been fairly steady, generally, on average, over the years. There are situations where there's been big jumps. There's actually a situation that actually falls. So if you have the option period at market value, which may seem like a big advantage on the surface, it may be a disadvantage because the actual rents may drop. And if the tenant can prove that the rents have increased to the amounts you claim they have, they could well truly be entitled to the lower rental amount or even a drop in rents if that has happened in a particular area. I've seen it happen many times over the years. Another critical issue is a demolition clause. This is very critical. Many landlords don't really think this one through, that I have found anyway. Basically, it means that it's written in the lease where the landlord can give a tenant a certain period of time to vacate the property. It could be 3 months, 6 months, 12 months, or whatever that may be. The problem is, it is very difficult to get a tenant on a full rental amount when there's a demolition clause inserted. Generally, I have found about half rent. This obviously varies. So if you're getting, $1,000 a metre, you may only get $500 a metre. So when you have inserting a demolition clause, you may have to have some sort of compensation for the tenant. It's a negotiation. That's the way I structured my leases, so that there's a payout figure if we have to vacate with 3 years to go, 2 years to go, 1 year to go. It's a amount of cash or incentive that the landlord pays the tenant then to leave. That's probably a win-win situation both sides, because the tenant feels comfortable and they know they'll get a cash payout to pay for a movement if they have to move, and the landlord is in a situation where they do have the building, a situation where they can develop it, they can negotiate with new buyers, or they can negotiate to develop the property when they want to do it and take those costs into account. A lot of shopping centres use the relocation clause where they can relocate a tenant from one part of the shopping centre to another. Also common in smaller places, but be aware of that situation, how you allocate that, because especially in shopping centres, it could cost a lot of money to move from one part of the property to the other. Another one which doesn't get thought out very carefully is a first right of refusal to purchase a property. It's obviously with smaller properties where negotiation with a tenant, they may ask, well, will you sell it? Those landlords say, no, I won't. And if it does get a situation where they want to give them an incentive to purchase down the track, they may say, we'll give you the first option to buy it in your rental period, or first right of refusal. Another way of attacking this is that you can buy it any time within your rental period for this amount of money. The problem is when these figures are determined, there's different market conditions. I've had situations where the offer to buy the particular property has ended up being a lot less than the current market value at the time. Another problem you may have is that there's certain laws regarding first right of refusal. For example, you may have 21 days. You have to give them 21 days to make up their mind. This makes it difficult. If you want to sell the property urgently, you've got a buyer, and buyers move very quickly. Time is a killer in any deals. Now, if you've got a situation where you've got a good offer to purchase the property, you have to legally go back to the tenant and say, look, do you want to buy it? And they may have 21 days. It varies from state to state, country to country. Some countries won't even have the law, but a lot of countries do have the law, where the tenant has to make up their mind. They might wait till the last possible day. Meanwhile, you've got the buyer sitting there waiting and possibly looking at other options for themselves. So think that one through. Discuss it with your lawyer and your commercial property coach. Use of property. Some owners, you may have purchased a property and has got a certain type of tenant, and you automatically assume that's the current use, and you put another tenant with a similar use in that property. Some, the council might come along and say, listen, these are illegal. I had situations myself where we had a certain type of tenant who was selling wholesale clothing, and we used to have buses come in and buy wholesale clothing from all over the place. And the neighbours complained about excessive traffic and buses blocking parking and that sort of thing. And the council coming up to the came up to us and said, listen, what's the story? You have not got approval for this. Our answer was, this has been going on for the last 20 years. The council's attitude was, and correctly, and you've been breaking the law for the last 20 years. So when you put a new tenant in, ensure that you've got approval for that use. You may have to go and get a new DA for the council. If there's a slight change of use, talk to your lawyer and your architect and take it up with the council. See what the last approval for this particular area and make sure you stick to it. If you want to change, you've got to go through the whole development process. Another issue is rent-free periods. Now, we always do whatever we can to get our tenant. How much rent-free period shall we give them? Basically, it depends on the current economics. Temptation is as short as possible and give a lower rent. That could be good. It sounds good because you want to get some money coming in straight away, but I like to look at leases on a long-term basis. How it would affect the value of the property. So I normally suggest to my clients that slow increases, ensuring that you reach a fair market value rental in a period of time. So time flies quickly. And if you decide to sell it, it doesn't happen very quickly. It could happen in 12 months' time. And the money you gained in the first 3 months is irrelevant long-term wise. It does affect the cap rate. Think about how the rental incentives and the rental increases affect the cap rate on a mid to long-term basis. Makes it the higher the rental, the higher the yields, the higher the value of the property, the better chances of getting a higher price when you sell it. And also, if you want to borrow money, the valuation is higher to borrow more money for other projects you may have. Now, there are times where you may be better off thinking short-term than long-term. Unless the property is a development site, I cover a lot of these real-life situations in my experiences with various clients in my book, Commercial Real Estate Investing for the Residential Investor. I'll leave a link in this video. In most cases, I would think about going long-term. As I mentioned before, if you have looks at a development site, you have short leases, you can have demolition clauses, if you like, just to get some money coming in until you get the approvals in. But generally, it does change from area to area. If you decide that place is a development site, it could take you up to 2 years before you, even longer sometimes, before you go through the process of plans drawn up, or the paperwork done, ready for lodgement to council approval, issuing contracts for builders and that sort of thing. So before the 2 years is up. So if not 2 years is not a long period of time in that situation. So you may find that you're losing rental for one of those 2 years. So plan ahead. Work with your commercial property coach in coordination with your lawyers and accountants for tax incentives and that sort of thing, with capital gains tax you may have. Your lawyers are sticking to the law, but make sure that everything is, all the I's are dotted, T's are crossed. Obviously, discuss this with your lawyer to make sure it's all correct. And so they are critical issues that are important. So they are the critical issues. So they are some of the critical issues you should look at when negotiating commercial lease contracts. There are others as well, depending on where you are, what type of building it is, the economy and that sort of thing. But discuss this with your commercial property coach and your lawyer to ensure that you get the best possible deal in the short term and long term. If you want to go through some real life examples of some of these critical issues that I've had experienced over the last 35 plus years in the commercial property industry, they are in my new book, Commercial Real Estate Investing for the Residential Investor. I have a lot of stories, real life stories, how they've worked for my clients over the years, and they may work for you. I'll leave notes for them, links to the Amazon book in the notes with the video. I'd like to hear your comments. how you're handling your commercial property leases. Please subscribe to this channel.